Chicago-based McDonald's is shutting down its experimental beverage-led restaurant concept after about a year and a half.
McDonald's is struggling. The brand is reporting a drop in sales worldwide. They're down by 1%. McDonald's shares have tanked by 15%. Why? Because customers find their burgers too expensive now, and many prefer to eat at home instead.
McDonald's posted its biggest US sales decline in nearly 5 years on Monday. Demand took a hit from a brief E. coli outbreak, while diners also proved cautious spenders. Comparable sales in the US fell 1.4% in the fourth quarter.
McDonald's is now known for its dollar menu, is having a tough time getting customers in the door due to the struggling economy. And Annie Gasborough is here to tell us how Mickey D's is making some changes to get more Big Macs on the table.
Breaking news. The Golden Arches are trembling. What started as a trade dispute has erupted into something far bigger, a cultural showdown. China and India, two of the fastest growing economies on the planet, have just announced tariffs of up to 300% on American fast food imports. And right at the center of this storm, McDonald's. For decades, McDonald's has been more than just a burger chain. It's been a symbol, a shorthand for the American way of life. Convenience, capitalism, the spread of U.S. influence from Shanghai to New Delhi. But in 2025, that symbol has become a target. In Beijing, officials are pushing to tax everything tied to McDonald's, from beef patties and cheese to the packaging itself. In New Delhi, lawmakers quickly followed, framing the move not just as economic protection, but as a declaration of cultural independence. This isn't about fries and milkshakes anymore. This is about pride, about power, about whether the icons of one nation can dominate the streets of another. For Washington, tariffs once meant leverage. But now, they've opened a new battlefield where symbols, not just steel or silicon chips, are under attack. McDonald's, a $200 billion brand with over 40,000 outlets worldwide, suddenly finds its future in Asia under siege. Imagine the fallout. Big Mac prices in Beijing tripling overnight. Middle-class families in Mumbai hesitating before buying a Happy Meal. Investors on Wall Street watching billions in market value vanish with every headline. And across social media, the debate is raging. Is this protectionism or the rise of a multipolar cultural order where no logo is untouchable? What began as tariffs is now testing America's soft power itself. When burgers become weapons, the question isn't what's for dinner, it's whose culture gets to shape the future. And that's where the real story begins. Because Washington's response and Trump's personal reaction could determine whether McDonald's remains a global giant or collapses into a cautionary tale. So stay tuned. Don't forget to subscribe, like, and share, because this isn't just about fast food. This is the front line of a global identity war. The news out of Beijing and New Delhi hit Washington like a thunderclap. 300% tariffs on American burgers. Within hours, the White House went into crisis mode, and Trump, never one to hold back, jumped in front of the cameras. This isn't just about burgers, he thundered. This is an attack on the American way of life. Behind closed doors, aides scrambled to hit back. By morning, leaked memos revealed the plan. 200% tariffs on Chinese steel, consumer goods, and electronics worth hundreds of billions. The message was unmistakable. Target America's symbols, and America will hit your supply chains. But the blowback was real. Economists warned higher tariffs would ripple into households. Phones, laptops, refrigerators, daily essentials could soar in price. With inflation already biting, critics said Trump's plan could hurt Americans more than Beijing. Trump brushed it all off. Flanked by steel CEOs and American flags, he framed the moment not as an economic fight, but a battle for sovereignty, likening it to the Cold War, where symbols mattered as much as missiles. For his base, it was classic Trump, bold, patriotic, uncompromising. But Wall Street had its own verdict. The Dow sank nearly 500 points, retirement funds shrank, and farmers feared another trade war crossfire. And so the bigger question loomed, is defending a burger worth shaking trillion-dollar trade flows? Or has McDonald's become the unlikely pawn in a clash over global power? One thing was clear, Washington had drawn its line in the sand, and the world was about to find out how far Trump was willing to go. And then came the jolt from New Delhi. Just as Washington braced for China's tariff strike, whispers from India's Commerce Ministry hinted at something even bigger. McDonald's might be in the crosshairs. The move wasn't out of the blue. For years, Indian officials have bristled at the dominance of American fast food chains. In Mumbai alone, McDonald's runs more than 80 outlets, leaving local brands struggling to keep up. Now, under pressure to back homegrown homegrown champions and assert cultural independence, India is preparing to draw its own red line. Insiders say the plan could hit imports tied to McDonald's, everything from beef substitutes to dairy and packaging, worth hundreds of millions each year. The logic is simple. Why should 1.4 billion Indians eat under an American logo when local names like Haldiram's or Burger King could take the spotlight? But beneath the surface, this is about geopolitics. By echoing Beijing's 300% tariff shock, India signals it's willing to coordinate pressure on Washington, even with its historic rival China. Analysts call it a strategic experiment. Two giants, often at odds, briefly uniting to push back against American cultural dominance. The stakes are massive. Together, China and India represent nearly 3 billion consumers. If they turn their backs on McDonald's, the ripple effect could shatter the brand's global model. Wall Street already warns that Asia drives a third of McDonald's growth. A coordinated pushback could erase billions overnight. And on the ground, the impact would be just as sharp. Imagine Delhi families watching Happy Meals vanish or double in price, while politicians frame it as a patriotic stand. For some, it's economic nationalism. For others, protectionism dressed as pride. Either way, the message is clear. India doesn't just want to be a market anymore, it wants to be a rule maker. And if it truly joins China in this symbolic war, the world may be staring at the birth of a new axis of power, one that could reshape not just trade, but the global order itself. In São Paulo, officials are hinting at new limits on U.S. fast food imports, echoing China's playbook. In Moscow, state media is celebrating what they call the collapse of America's burger empire, while in Pretoria, lawmakers are pushing food sovereignty, a phrase that could soon mean bans or new taxes. This isn't just about McDonald's anymore. It's about BRICS flexing its muscle. Together, Brazil, Russia, India, China, and South Africa represent over 40% of the world's population and nearly a third of global GDP. If they coordinate, even loosely, they could turn a corporate headache into a global shock for one of America's most powerful cultural exports. Europe is watching nervously. McDonald's outlets in France and Germany rely on U.S. corn, Canadian beef, and Italian packaging. If those supply chains break, the ripple effects could hit farmers, truckers, and manufacturers across the continent. But the EU is divided. Paris and Berlin are uneasy with Washington's hardline stance, worried about inflation and political backlash, while Southern Europe, more dependent on U.S. grain, prefers caution. Brussels' silence isn't neutrality, it's indecision, and one more shock could tip the balance. For McDonald's, the stakes go beyond sales. Burgers have become symbols, and the real question is whether America's cultural dominance can hold. The shock waves are already hitting home. McDonald's is one of the biggest buyers of U.S. farm goods: beef from Nebraska, potatoes from Idaho, dairy from Wisconsin. For farmers who lived through the 2018 trade war, this feels like déjà vu. Billions in contracts now look shaky, and by late August 2025, farm lobbies were sounding the alarm. Losing China and India, the fastest-growing markets, could slash farm income by double digits, leaving ranchers with oversupply and growers staring at mountains of unsold crops. The farm leader summed it up best: "When McDonald's sneezes, we all catch pneumonia," and he wasn't exaggerating. From packaging plants in Ohio to dairy processors in Minnesota, entire supply chains depend on McDonald's global reach. If tariffs cut off Asia, factories lose orders, workers lose shifts, and towns lose tax revenue. What looked like a trade fight overseas was quickly becoming a jobs crisis at home. Then came the warning letter. McDonald's quietly told the White House that losing China and India could wipe out tens of billions in value, shaking Wall Street, pension funds, and small investors alike. Within days, big banks flagged the stock as high risk. This wasn't just about burgers anymore. It was about financial contagion. Pressure mounted. Farm lobbies demanded subsidies. Lawmakers from rural states pushed Trump for answers. But the White House was cornered. Back McDonald's and face accusations of bailing out big food, or refuse and risk a rural revolt. What started as a trade dispute had morphed into a domestic crisis, blurring the lines between farms, factories, and finance. And abroad, a new battlefront opened: screens. In China, state TV painted McDonald's as a symbol of Western arrogance, while hashtags calling for boycotts exploded online. Viral clips showed young people tossing fries in the trash, influencers praising local brands as patriotic choices. It wasn't just propaganda, it tapped into pride. In India, the story twisted again. Local chains seized the moment, pitching themselves as the true national alternative. Burger King rolled out spicy paneer burgers as a cultural counterpunch to the Big Mac. Every meal became a statement: buy Indian, support Indian, reject the U.S. brand. The backlash wasn't forced, it resonated, and that's what made it powerful. For Beijing, the anti-McDonald's campaign gave political cover for its 300% tariffs, framing them not just as economics, but as sovereignty. In New Delhi, the support local wave made restrictions easier to sell at home. What began as a tariff debate had morphed into a mass movement powered by memes, hashtags, and national pride. The fallout is bigger than culture. Every skipped burger in Shanghai or Mumbai is a lost sale, a dent in revenue, and a crack in Wall Street's confidence. And as these narratives spread, they don't just weaken a company, they chip away at America's ability to project influence through its brands. When burgers turn into battle lines, the question isn't whether McDonald's can adapt, but whether America's soft power can withstand the boycott generation. China and India, together home to more than 2 billion people, have turned a fast food chain into a front line of global politics. McDonald's, once just burgers and fries, now stands as a symbol in a war fought with images, habits, and pride. In Shanghai, a burger is no longer just dinner, it's a test of loyalty. In Mumbai, a happy meal is weighed against identity. And in Washington, leaders are realizing this isn't just a trade fight, it's a symbolic war. Experts warn this could be the opening chapter of a long contest where cultural icons themselves become weapons. Logos, movies, sports, even food, all pulled into the struggle for influence. If McDonald's, worth nearly $200 billion, can be shaken by coordinated pressure, what happens to the next brand? Because in the end, this isn't only about trade, it's about a shifting balance of power, written not in policy papers, but in the everyday choices of billions. McDonald's may survive, it may adapt, but it will never again be just about food. The question now is whether Washington will defend its golden arches or watch them become the first casualty in a new kind of war, the war of symbols. All right, that's a wrap for today. Thanks for spending a little time here, it really means a lot. If you enjoyed hanging out, hit that like button, subscribe, and I'll see you in the next one.